an hour before the open on Wednesday, October 13th. Hello, traders. Let's take a look at the market. Let's take a look at our picks from yesterday. Let's see what we've got shaping up today. Market first, market first, market first. Always important to get the context of what is happening in the overall market. I'd mentioned to you yesterday that we had the market closing below the 100-day moving average. We backed off of that breakout above the downward sloping trend line. So we break out through it. We bounce off the 50-day moving average. That is a very bearish candle with follow through selling the next day. Now we've poked below the 100-day moving average, heavy selling pressure. So we need to favor the short side. But you can also see that this 100-day moving average is very, very sticky. What does that mean? That means that the price tends to hang around that 100-day moving average. Yesterday, we had a fairly quiet day, a really quiet day, in fact, because everyone's waiting for the FOMC minutes that are going to be released this afternoon. They want to see if there are any indications of when tapering might start. We also have earnings season kicking off with the big banks right now. So traders are also waiting for that. As we went into the day yesterday, we could see that the trading was extremely compressed and contained within a tight trading range. The average true range for the S&P 500 20-day average right now is about 60 S&P points. If you take the high and the low, we spent almost the entire day in a 20-point S&P 500 range. That is a third of its normal trading range. Lots of mixed candles, green and red. When you come into the trading day and you see this type of price action, now we're into an hour. We haven't been able to get through the high or the low of the day. Lots of mixed candles, no directional movement. This is a warning sign that should be going off in your brain. Do not trade. Trim your trade size way back, trim your trade count way back. You have no market tailwind. That means that you need to be extremely selective with your trades and you need to err on the side of doing absolutely nothing. I feel that we can learn a lot from trades that don't work out. In fact, probably even more so than trades that do work out. So I want to take a look at the two picks from yesterday. They didn't set up. The market was pancake flat. There's nothing to trade here. So let's take a look at LUV. That was a short that I had suggested. And you can see here that the stock had broken the 100-day moving average. We had this bearish hammer right in here, looking for some follow through down to the 50-day, which I still believe is in play. This 100-day moving average is going to serve as resistance. So I think it's still a viable short. Let's take a look at the price action. And as I mentioned to you, we want to see relative weakness in the market. Okay, we want to see the market breaking out below the prior day's low. We didn't get that. We also wanted to see relative weakness in the stock. So let's put the S&P 500 up and let's put the 1OSI indicator up because it makes it a little bit easier for us to see relative strength and weakness. So we get the stock opening and a nice long green candle right on the open. Look what happened during the first 2 hours of trading. The stock never went weak relative to the S&P 500. In fact, it's kind of working its way higher. Right in here, you got the market selling off, and the stock has been able to hold support very, very well. We got this nice little market rally in here. Finally, the stock is starting to show a little relative weakness late in the day. We can put up our 1.0 squeeze indicator, and you can see the breakdown that we had. And there you can see yellow dot as a compression. You could have drawn a horizontal line here, and you would have had a tiny, tiny little shorting opportunity, but the best trade was no trade at all because you had nothing, absolutely nothing going on in the market. Let's take a look at the long that I had suggested for yesterday. It was JKS. Did have a couple of really nice bars that started out early in the day, so the stock got off to a really good start, and then it did absolutely nothing. And here you can see you've got a little bit of relative strength early, but the market's not going anywhere, so there's really no reason to take a position early in the day with the market flat as a pancake. There's the market. Stock makes a little bit of a move and then does nothing. Get a little breakdown here below this horizontal support line. There's nothing there. So did the stock perform poorly? No, didn't do anything. JKS didn't do anything. The market didn't do anything, which I'm always challenged because I have people saying, "Oh, you don't show a real trading account with images of your P&L." Folks, I could Photoshop that. There's a bunch of garbage out there. I'd rather show you an actual trade that you can take advantage of. I don't have to show you my P&L. I could show you the trade and then you can see the stock move in the direction I told you it was going to move and you can make money on the trade. Wouldn't you much rather have that? So I get a little tired of people saying that because I'm showing you trades that are setting up how you should enter them and how you should exit them. That's the takeaway from all this, and learn how to do it on your own. CRSP. That's a stock that I showed you on Sunday night. So you were able to take a short position on it Monday. I described how this compression right here and the fact that the stock had been able to hold the low of this long red candle and then follow up with selling in here, that this was a bearish formation. Yeah, but Pete, the stock didn't go down. It just took a couple of days. The stock closed yesterday at 102.59. This morning, it's down almost $10. So yes, it is going to make the move. Just had to be a little bit patient with it. Would I short it now? No, not when it's down $10. I'd have to evaluate the market and evaluate the stock during the course of the day. This is a great environment to day trade, but I would not be swing trading because the market is not giving us much to work with. If I have a bias, it's negative. There is support that's pretty close by, right down here at the 429, 428 level on the S&P 500. I do believe that we're going to test this low. If we test that low, there's a good chance that we'll break down below it and we'll go down to the 200-day moving average. However, I don't want to be aggressively shorting right now because we have seen multiple support here and the market is in a gangbuster rally like that. You do not want to be picking tops and getting short overnight when you have the chance of massive rallies, which incidentally, overnight news, the debt ceiling did get extended till December 3rd, so that will provide a little relief rally right now. We have the S&P 500 up 8 points. I don't trust the gaps higher because we've had this selling pressure working on the market recently, and we're below that 100-day moving average. That is your guide today. The 100-day moving average is your guide. It is going to provide resistance for us. We should expect that early in the day, we're probably going to test that gap higher, just like here. Get a little gap higher, whap. Here we get a nice little gap higher. Everything looks great. Off to the races, not so fast. And we sink back. There you've got your opening gap higher, and it gets tested. So I would expect that at some point this opening gap higher is going to be tested. Wait for those FOMC minutes. I'm also expecting that we get a little bit of activity for the first couple of hours today, and then it's Deadsville. Everybody's going to wait for this FOMC minutes. They want to see how the Fed officials voted. They want to see the comments, and it's going to be a gigantic nothing burger. There's nothing new that they're going to get out of it. Usually the FOMC minutes don't mean that much, but right now, with taper talk starting to escalate, everyone's waiting and watching, and they're looking for any kind of information that they can latch on to. Over the course of the next couple of weeks, the focus will shift to earnings, which incidentally, forward PE ratios haven't been this high since the tech bubble in 2000, so prices are very lofty. Also, the number of analyst downgrades has been exceeding the number of upgrades heading into earnings season. Not particularly good. I do think that banks are going to have decent earnings. I also think that there'll be some buying in those names because of the guidance and the fact that interest rates are moving higher, and we know that from TLT. Take a look at that major breakdown. So interest rates have been moving higher. Bonds lower, interest rates higher. I'm going to leave you with a pick that I like, and I'm only going to focus on the long side. I've got a couple of stocks that I really like. They've been coming up in the searches, and yesterday we were trading Tesla, which incidentally, Facebook was the other short from Sunday night. And I told you it's got a path to the 200-day moving average. This is the price action on Monday and Tuesday. That's where the video came out, and you could see from that opening price, yes, it did test the 200-day moving average. So let's take a look and see what I like. I like Tesla. I really think Tesla's got a great price pattern here. You can see how strong it's been relative to the market. Orange line above zero. This stock wants to go. Beautiful upward sloping trend line in here. For those of you that like to sell out of the money bullish put spreads, you can lean on that. The only problem is that earnings season is coming up. So keying off of that 765 level, if you can get some decent premiums, that would be okay. But primarily, I like day trading it. You can see this breakout through horizontal resistance and the fact that the stock wants to move higher when what? When the market is heading lower. Stock moving higher, market moving lower. If there were profit takers in this name, this market decline would give them every reason to take profits on Tesla. But that little selling pressure and those people that would be lightening the load on Tesla are more than offset by the people who want to buy, 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 gotta have it now. And that tells you that as soon as the market finds a little bit of support, whoosh, long green candle, hello, UPST. Love that chart. Tails above body, downward sloping trend line, broken to the upside. Stock closes near its high of the day. Fantastic relative strength. You can see how strong the stock was yesterday. Relative strength almost the entire day. Had a little bit of profit taking late in the day. It will get right back on track. Same thing here. Massive run. There's your flagpole. There's your little dip. There's your downward sloping trend line. There is your bullish flag formation. Orange line above zero, UPST. When I show you these stocks tomorrow in my video, I can almost guarantee you that they are going to be higher than the opening price today, and that's regardless of what the market does. I think the market will probably open higher. Everybody will be excited about the debt ceiling being raised, and then they're going to wait for the FOMC minutes. FOMC minutes will be a nothing burger. So I'm looking for relatively quiet trading, and I believe that through the course of the day, that 100-day moving average will be intact. The trading range will compress during the course of the day until that news comes out. This is probably going to be another one of those days where you want to keep your trading size very small, want to reduce your trade count. You want to be super selective with your trades. This is a low probability environment for swing trading, and it could be so for day trading as well, with the ranges really compressing. There will be times when you are going to ramp up your trading, when we've got a really, really good technical formation, like a blackjack player, a professional blackjack player who counts cards. He varies his bet. He keeps his bet small until he knows probability favors him. Then he scales up dramatically, knowing that the odds are in his favor. That's what you have to do when you're trading. This is one of those times when you really want to pull back. Let the market do what it's going to do. Wait for those setups that we're looking for. And then when we get them, then you can swing for the fence. Good luck with your trading today. See you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.